And hello, and welcome to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm Ray Treverson from OTG Capital. I'm your host, and this is a show that is broadcast on Radio Northern Beaches locally and nationally around Australia on the Community Radio Network. Today, I'm really pleased to welcome to the microphone for the first time the CEO, Ian Irvine of the Listed Investment Companies and Trusts Association. So I needed to get that out slowly because I got it wrong first time, listeners. So Ian, welcome to the show.
Thanks, Ray. Good to see you. That title is a mouthful. I'll be the first to acknowledge it. We abbreviate it to LICAT or LICAT, your choice. But
I like LICAT.
It's a lot easier to say.
All right. So one of the nice things about LICAT is you've got a great website. And ladies and gents, you know that Dollars Making Sense is always about education. And the nice thing about LICAT is it's a not-for-profit company that has a standard not-for-profit constitution and an elected board of directors. Now, Ian, you are the CEO, and I guess you sit on the board, one would assume.
I work with the directors as part of the board, but I will just point out that I'm not a fund manager. I don't manage money. I'm my pure involvement with the associations all around helping them through the advocacy and the education activities we run. So we deal with a lot of retail investors through a number of channels, particularly in terms of education.
Wonderful. And I guess because we are all about, hopefully arming people with a lot more information and education to become better investors, better handlers of money, I think this is a really great opportunity. And I thank you for coming on the show because I've been trying to hog tie you to get you onto the show for a while now. So I'm really pleased I finally got you. Now, when I look at the LICAT website, I'm really amazed that when you look at LICATs and investors, something like 700,000 interests in one or more LICAT or LIT. So that's a listed investment company or a listed investment trust. That's correct?
That's correct. In fact, that number's growing. I should update the website. Thanks for pointing that out. It's about
800,000.
Yeah. And these are people that hold an interest in one or more LIC, listed investment company, or LIT, listed investment trust. And they're using those to either deliver income leading up to or in their retirements, or prior to that, grow their wealth in a measured and considered way, which is what the closed-end structure of an LIC or an LIT offers. Closed-end capital held in the company or trust structure and allows managers to make considered decisions about investments and how they treat the opportunities to either buy into or sell out of whatever they're holding underneath those structures.
Okay, so back to first principles. One of the first things, I guess, in TLAs, three-letter acronyms, we've got two of them here now. Maybe a good starting point is to explain to the listeners and viewers what a LIT and what a LIC is.
Okay. To extend out those three-letter acronyms, they are exactly what they say. They are a listed investment company, LIC, which means it uses a company structure. The same structure that a BHP, Westpac or Woolworths would use. Closed-end, limited by a number of shares on issue at any one point in time. They raise capital as needed, and in fact, they can return it to owners because you are an equity owner. You own a piece of that company. You have an obligation as owners, and the company has an obligation to you as an owner as well. So that's the company structure. The other side is, exactly as the name says, listed investment trust, and it uses a trust structure. Now, the main difference between trusts and companies is pretty much around tax. I'm not going there other than to say a company pays company tax, the company rate, typically 30%, and can pay through, as a result of that, pay a franked dividend to its owners. A listed investment trust, or LIT, on the other hand, doesn't pay tax at the entity level. It passes through all income to the underlying investor or owner, and in turn, they have an obligation to make the appropriate tax payment at tax time, be that held as a super fund, self-managed super fund, in your own name or in a company itself. Principle, that's basically the difference.
Now, I'm curious then, because with a LIC or a LIT, and again, in the interests of transparency, people that follow my show regularly know that I am a fund manager, and OTG Capital that sponsors the show, we actually have a wholesale unlisted investment trust. Now, because I say wholesale, there are Corporations Act out there that says there's certain rules that says I only deal with wholesale customers in comparison to retail. And again, the differentiation, we could go and we could have a show on that alone. But when you're looking at LICAT as an association, does it cover both types of investors, wholesale and retail?
Look, that's a good question. The answer is probably yes, but it's particularly suited to retail investors. These are products that are listed on the ASX.
Mm-hmm.
So back to that first letter, L, listed on an exchange in Australia, the ASX, and they're available to retail investors. They have the protection of the ASX listing rules. So these are listed entities. They are listed under the ASX admission rules for listing, as opposed to other structures such as ETFs, which are admitted under a different rule structure.
Yeah, well, ETFs are a different ball game. I don't want to go there today, that's for sure.
Suits me. But there's nothing stopping wholesale investors from choosing to do so. So I would imagine there's a number of wholesale investors who like the idea of a listed investment company, purchase it on the ASX, but as well as their entitlement to be considered a wholesale investor, are able to invest in other unlisted wholesale funds.
Now, one of the first interviews I did, the show's been going for over 3 years now. I was talking to people from another exchange, and again, I don't want to get into who's better or not. We don't do that. But you mentioned the ASX, but are these trusts also listed on Chi-X, for example, the other exchange that operates here in Australia?
I don't believe so. In fact, our members, none of them are listed on the other exchange, which I think now is called CBOE Australia.
There you go.
Our exchange's name. It's more of a trading venue, and there's pricing tension between the two exchanges, and they do. You must be, as an investor, executed on the exchange offering the best price. So, but in terms of listing venues, it's principally the ASX for LICs and LITs.
And I guess people would understand the ASX, I guess, as an entity, probably a very retail in nature, but also it's a very common term that people are very familiar with. And ASX also do a lot of education themselves. So I think from a branding and recognition perspective, there's a lot more association there than maybe a more institutional view. I don't know. What are your thoughts on that?
Even more so because the ASX itself is a listed company.
Of course.
I'll come back and say that again. The ASX is a listed company, actually listed on its own exchange. So as I just described, it has the company structure where it has a limited number of shares on issue at any time. They raise capital as needed. They give it back to customers or investors or owners if not, and you trade shares between other investors if you wish to move into or move out of your investment in something like ASX as you would an LIC or an LIT.
Now, I guess what's curious to me, because having come through the ranks as a financial planner years and years ago, I always wanted to be a fund manager, so I went off and did my stuff there. There are organisations upon organisations that are representative bodies, and there's been a bit of a rationalisation, I guess, amongst financial planners, not just because they're losing so many of them, but there were, I think, 5 or 6 bodies at one stage looking after the so-called interests. Now, when I look at LICAT, I guess it's not the kind of grouping of people invested interests that I saw as a natural body of people coming together and saying, hey, we need a representative body. Why was LICAT formed?
Well, it is, there are common interests. So the benefit of any association, and yes, there's plenty of financial planner associations. I think it's more than 5. We just won't go there. But you need to speak with one voice. So many investors, particularly those in retirement, are very interested in a steady and safe and secure income stream, and when it comes to companies receiving franked dividends. Now, let's not be too political, but everyone would remember the 2019 election when the opposition at the time put forward proposals to change the treatment of franking credits. And it's been attributed to perhaps the downfall in losing that election back in 2019.
Well, yeah, my own local member, and given that this goes out on Radio Northern Beaches, my previous local member, Mr. Jason Falinsky, led the parliamentary inquiry together with Wilson Asset Management. And again, it was a fascinating exercise in use of taxpayer funds. But it was, again, I think you correctly characterise as being one of the strings in the bow that brought down a potential Shorten government back in 19, for sure.
Yeah, don't want to revisit the past, but look, Falinsky and Tim Wilson worked with Jeff Wilson. Too many Wilsons in the mix here. But Jeff's one of our directors. So Jeff was particularly vocal, but behind Jeff and our other directors was the association. And we worked with the likes of the Self-Managed Super Fund Association, as it was known at the time, the Stockbrokers Association, to pursue this in the interest of those investors who relied very significantly on the ability to receive franked dividends. So as an association, we did that on the advocacy front. Now, the good news is, whilst there's still some discussion going on around about the treatment of franking credits, and currently there's some legislation that's being tweaked, if you like, around those issues, which we've been involved with. But what we've been able to do more of over the recent past, following the COVID issues, is to actually get back out on the road and do more education with retail investors face-to-face and through programs such as yours, Ray. Really appreciate this opportunity to be involved.
Oh, look, and again, I think the show's starting to get a little bit more traction. I was pleasantly surprised recently. We had Centrelink come along and say, hey, we'd like to come on your show and get a message out. And I think, wow, we might actually be getting more than a few people, one or two's out there. So thank you to the listeners out there anyway. And again, thank you for your vote of support there, Ian. I might say, though, that there's an opportunity that I certainly want to take up in the future to come back and talk to you about franking credits, because it's something together with, I guess, some of the other elements of tax, and I use the term middle income profligacy, I guess, and tax breaks that were provided during the Howard era that are still hanging around. I'd like to get back to another time where we might talk about the adequacy of it, and necessarily whether, we're in a budget framework these days looking forward, whether it's something we can potentially afford. I'll park that, though, because it's contentious, and certainly I'd be interested from the views of your members as well. But look, we're at that time of the show. It's just about time for our little disclaimer notification that we stop and have a break for. You're here on Dollars and Making Sense, a weekly show about finance, money and investing. I'm Ray Treverson, your host. I'm here with Ian Irvine, the CEO of LICAT, and we'll be back in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels or email. Please search for Dollars and Making Sense in your favourite podcast platform, or check out our blog at otgcapital.com.au/blog. And welcome back, ladies and gentlemen, to Dollars and Making Sense, a weekly show about finance, money and investing. I'm your host, Ray Treverson, and at the microphone today I have Ian Irvine, CEO of LICAT, the Listed Investment Companies and Trusts Association. Now, Ian, before we went to the break, we were talking a little bit about some of the things that LICAT does, and what a LIC and a LIT is. So I think we've done our listeners to death with TLAs, three-letter acronyms. What I'd like to do now is move on, and let's talk about some of the resources that people might be able to gain by going to your website or attending some of your events. Because like me, I didn't really know a lot, and I think we harp back to, we were chatting in between the break, the first time we actually met was at an ASA meeting.
Yeah, and actually that was the ASA conference. First time they'd been back together post-COVID. I think it was back in May this year, 2023. And we met after we'd run a session on stage, live in front of an audience of a couple of hundred people, 230 people. And one of the things we try to do in the education sphere is to demonstrate the breadth of the underlying asset classes that a listed investment company or a listed investment trust holds. And if I recall correctly, on that day, we had a representative from Wilson Alternative Assets, so holding alternative assets, alternatives to equities. That was Dania Zinurova, and then Andrew Lockhart from Metrics Credit, which is a private debt listed investment trust. And they actually extend loans to Australian businesses to help them operate, grow and develop. And the underlying income that's received by way of interest is passed through that closed-end trust back to the end investor. And then finally on that panel, we had a 100-year-old listed investment company, Whitefield, which is actually the longest-running LIC in Australia. And
Wow.
Angus Dusky, the managing director, spoke through how they've managed an equity portfolio over the course of time. So we had alternative assets, private credit, and equities. And a lot of people just stop at equities when they think about listed investment companies in particular.
Yeah.
But that said, they're all tremendous. So the likes of AFIC and Argo are probably well known. What we try and do is dig down a little bit behind the AFICs and the Argos of the world and introduce investors to others so they can see the breadth of the assets, style of management, and make a decision through education, through research. And if they're in any doubt, I would suggest strongly that they do get advice from an educated professional.
Yeah, and I guess one of those aspects, and even in talking to everyday consumers when I go to retail events or exhibitions and shows, even those that are so-called sophisticated investors can always do with a bit of education. And I put my hand up there as well. I'm never too old to learn new tricks, even at my encroaching years. And I guess from that perspective, one of the things that I notice on your website is there is an education tab there, and you do run events yourselves as well. Can you tell the listeners a little bit about some of those events?
Well, we tend to work with an association. So as you'd appreciate, running an event yourself can be a costly and time-consuming.
Oh, absolutely.
We look for partners that we have a synergy with. So as I mentioned, the ASA, we do some work with the Self-Managed Super Fund Association, both at the advisor level as well as the retail investor level. They're coming to that space a little more. So rather than actually do all the lifting ourselves, we share, we participate, and we work with partners. So that's one of the approaches we've used. I'm just trying to think back through some Self-Managed Super magazine, that sort of thing. So a lot of the attraction of the types of structures that we have, LICs and LITs, have great appeal to self-managed super fund trustees and members in terms of driving their own wealth and income.
Yeah, I must say, anybody that can get out there and start letting people know that there are more ways, and I don't use the word better, I just simply say more, because I'm trying not to be biased, even though I am horribly biased. But I'd like to keep asking people to look beyond shares and cash, because I still think that Australian investors and investing in this country is still very localised and still very myopic to just shares and cash. And the opportunity, you've mentioned a few as well with LICs and LITs, but the ability to go across a whole range of different asset classes, including shares, that all of a sudden people start going, oh, I didn't realise I could invest that way.
Yeah, and you touch on, again, an interesting point, and extend that range of asset classes that are available. And this is going to seem strange to some people when I say what I'm about to say. Global LICs, so this is listed investment company structure, investing in assets held offshore around the world, could be the United States, could be Europe, could be Asia, put together a portfolio of those shares because of the company structure, operating in Australia, making a profit in Australia, paying tax in Australia, they can provide a fully franked dividend to their investors, even though the underlying's global equities. And
I guess there's also an additional benefit there, because, again, having spoken to a whole range of different people on this particular subject, there's a certain hesitancy to move offshore, particularly if they've got to then go into a foreign currency. There's potential exchange rate risk and hedging and that's all taken care of then by the fund manager on their behalf, isn't it?
Yeah, it's in that company structure. So it's inside the company, and all the people that have the know-how and the wherewithal are doing exactly those things. If any of your listeners are familiar with what's called a W8 bend form, they've probably pulled their hair out every time they've had to complete it. None of those worries. So it's done by the managers. They're the guys going offshore. They're the guys interviewing those companies, deciding whether the share or portion of that company is right to have in the fund, and making all those decisions. Get in, get out, when to, all those sorts of considerations. So they're professional fund managers, actually doing all the heavy lifting for investors, but delivering potentially an income stream over time that's either constant or grows, and in some cases, I've mentioned, particularly through the company structure, pay a franked dividend.
So I'm curious then, Ian, you mentioned that you've got active management in there doing things on behalf of their clients and investors. Are there such things as passive LICs and LITs?
No. Simple answer on that one. They're quite the opposite of index or passive investing. So instead of holding everything again in the index as a way of achieving the index outcome, they may hold a truncated version of that, nowhere near 200. It could be 20, 50, 60, maybe 90, but they'll concentrate on where their mandate. So I'm going to invest on your behalf to deliver an income in the range of, no guarantees of the outcome, as we all know. And we're going to use our benchmark will be, for example, the ASX 200 accumulation index, which actually includes dividends. There's actually an index that includes not only dividends, but adjusts it for franking. It's unique to Australia. Nowhere else in the world does what we do with regard to franking. And I keep talking about franking because it is important. But there are a couple of funds that are actually suited to delivering income as a result of passing through the full value of those franking credits. So
yeah, again, sorry to harp back to franking credits, but that's the kind of thing you've just said it yourself, that it's unique to this jurisdiction. And I say to people, nowhere else in the world do we do this, and there's a reason for it. But again, we're going to pick that up on another show. Now, I'm curious, again, when I look at your website, as I look away at my other screen, advocacy is always a big part of an industry association in representing its members. I guess without getting too specific at the moment, is there anything that's very topical that you find that the association is heading into Canberra to talk to Stephen Jones and to Dr. Chalmers at the moment?
It's what I spoke about earlier on. There's some tinkering going on around franking and treatment of capital raisings, and then a dividend being paid often could be misconstrued as we raise the money to pay the dividend. I know we're going to talk about franking at another stage, but franking credits exist because tax has been paid. I can make that very clear. So the government's received the full 30%. It's in their bank account. They've used it. And now when there's an adjustment being made as someone pays or a company pays out a dividend, it can have a franking credit attached to it. So the end investor gets that benefit if they're entitled to it. So it's really an adjustment on their own tax. So the government sort of, and you could present this in ways of, they raised money to pay a dividend, which was franked. The reality is the tax has already been paid. But there's no parameters around how recently that capital raising occurred and how recently after that or before it that dividend was paid. Mm-hmm. The important thing to remember is listed investment companies and trusts are particularly assiduous with how they manage their investors and their owners' capital. If there's too much, they'll give it back to them. If they need more to continue the business and grow the business, they'll raise it. So this almost be a function of, we don't need it right now, here's some back for you. And as you go forward, we do need some more capital, grows the business, but that outcome is successful, we'll pay you a dividend. And there's some misconception that we actually raise capital to pay the dividend. We really raised it to grow the business. It was successful. We paid you the dividend.
Great. Now, again, out of interest, how big is LICAT? How big is your association from a core and then the onion ring that goes around it, so to speak?
In round numbers, there's about 100 listed investment companies and trusts. About half of those are members, but that half represent around about 75 to 80% of the value.
Okay, so the old 80-20 rule applies.
Yeah, very much so.
Great. And again, how often do you get together as a group to sort of nut out, I won't use the word war plan, but let's say your strategy on engagement and advocacy, both up and down the chain, I guess? Again,
these are companies and trusts. And again, a lot of it's very similar to how a company operates. So we do have a board of directors. Mm-hmm. We do have a CEO, that's me. We work on a regular basis together to talk through the sorts of things you've just discussed. We do, as a result of being a company, have an annual general meeting, usually in November each year. That's where all of our members can come along. And we typically have a few items of interest as well. So it's more of a discussion around what's going on generally. So last AGM, last November, we actually had someone come along and talk to us about cybersecurity. Right then, it was becoming pretty topical. It's become more so since then. So we needed to understand what our obligations were in terms of protecting our investors' information, which is usually held through our registry. So the registry came and gave us an outline of how they protect our interests and our investors and shareholder interests in that regard.
Yeah, I could have helped you out with that one, Ian. I talk about cyber security and malware all the time because that's a bit of my expertise, but for another time. So look, one of the interesting things now, one of the takeaways for our listeners, LICAT, licat.com.au is your website. And obviously, please, listeners, if you want some information, go and have a look at there for the first point. There's some really good resources there and, again, some good background reading. Ian Irvine, CEO of LICAT, thank you so kindly for being part of our show.
Thanks, Ray. Great to be with you. Look forward to next time. Franking credits, I hear.
Yeah, absolutely. Thanks, listeners. You've been on Dollars and Making Sense, a weekly show about finance, money, and investing. And until next time, it's adios.